Most people think investing means one thing: stocks, maybe real estate, if they're ambitious. But here's the uncomfortable truth. There are dozens of ways money grows, and most people only learn 2 or 3. That means they spend their entire life playing a financial game with incomplete rules. I used to believe investing was only for people with large capital, insider knowledge, or perfect timing. Then I discovered something that changed everything. Investing isn't about finding one perfect opportunity. It's about understanding the ecosystem of wealth-building tools. And today, I'm going to walk you through different types of investments, from the obvious to the overlooked to the ones quietly creating millionaires behind the scenes. But there's one type of investment near the end of this video that most people ignore. And ironically, it often produces the highest long-term return. Let's start with the one everyone thinks they understand. 1. Stock market investing. Most beginners start here, buying shares of companies, owning a piece of businesses like Apple, Amazon, or Tesla. It sounds simple: buy low, sell high. But here's what most people miss. Stocks are not just prices moving on a screen. They're ownership in productivity. And if you misunderstand that concept, you'll trade emotionally instead of investing strategically. Because the real power of stocks isn't fast gains, it's long-term compounding. And compounding becomes even stronger when you expand beyond individual stocks. 2. Index funds and ETFs. Instead of betting on one company, you invest in entire markets. This is how many investors quietly outperform professionals. Index funds remove guesswork. They track entire economies. But while index funds reduce risk, they also teach a deeper lesson. Wealth often grows faster through consistency than intelligence. And consistency becomes even more powerful when combined with tangible assets. 3. Real estate investing. Property has built wealth for centuries. Rental income, appreciation, leverage. Real estate is one of the few investments where banks help you buy the asset. That alone changes the wealth equation. But property isn't just about buildings. It's about cash flow stability. And stability opens doors to another investment most people underestimate. 4. Dividend investing. Getting paid simply for holding assets. Imagine owning businesses that send you money regularly without selling anything. That's the essence of dividend investing. But dividends reveal a powerful wealth principle. Income-producing assets reduce dependence on work. And once you understand income-producing assets, you begin exploring digital ones. 5. Digital assets. Online businesses, websites. This is where modern investing shifts. Websites, content channels, digital products. Some digital assets cost little to build, but generate income for years. And unlike traditional investments, digital assets scale globally. But scalability introduces another investment class many ignore. 6. Business ownership. Starting or owning companies. Businesses have created more millionaires than any other asset class because they combine income, equity, and leverage. But businesses are risky without diversification, which leads to a quieter, more passive opportunity. 7. Peer-to-peer lending. Lending money directly to individuals or small businesses through platforms. You become the bank. But lending reveals an uncomfortable truth. Returns often increase when you understand risk, not avoid it. And understanding risk becomes critical when investing in commodities. 8. Commodities. Gold, oil, agriculture. Commodities protect wealth during economic uncertainty. Gold, especially, has survived every financial collapse in history. But commodities don't produce income. They preserve value, which forces investors to balance protection with growth. And growth often leads to emerging investment technology. 9. Cryptocurrency and blockchain assets. Highly volatile but revolutionary. Crypto introduced decentralized ownership and programmable money. But speculation destroys beginners who don't understand fundamentals. And fundamentals become clearer when you explore structured investment funds. 10. Mutual funds, professionally managed portfolios, for investors who prefer delegation over decision-making. But professional management doesn't guarantee superior returns. Sometimes, the greatest returns come from investing in knowledge itself. 11. Education and skill investment. This is the investment few people categorize correctly. Skills generate income streams no market crash can erase. But knowledge only becomes valuable when it converts into opportunity, and opportunity expands when relationships enter the investment equation. 12. Network investing, building relationships that create financial opportunities. Many high-return investments never appear publicly. They exist inside networks, but networks require credibility, which is built through reputation. And reputation leads to influence-based investing. 13. Personal brand investing. A strong personal brand becomes an income-producing asset. It attracts deals, partnerships, and monetization opportunities. But brand authority only grows through consistent value creation, which opens doors to creative asset investing. 14. Intellectual property, books, music, courses, patents, licensing. Intellectual property can generate royalties indefinitely, but intellectual property thrives when distribution exists, and distribution leads to audience-based investing. 15. Content and audience investing, YouTube channels, podcasts, social platforms. An audience is one of the most flexible financial assets in the modern economy. But audiences only generate income when trust exists. And trust multiplies when investors master time-based strategies. 16. Long-term compounding strategies. This isn't one asset, it's a philosophy. The most powerful investment force isn't intelligence, it's time. Compounding rewards patience brutally. And patience is hardest when markets fluctuate, which introduces one of the most misunderstood investments. 17. Cash, reserve, and liquidity investing. Yes, cash itself can be strategic. Cash creates opportunity power. It allows investors to act when markets crash. Most people see cash as inactivity. Smart investors see it as positioning. And positioning becomes critical when investing in alternative markets. 18. Alternative investments. Art, collectibles, wine, rare assets. Some rare collectibles outperform traditional assets over decades. But alternative assets require specialized knowledge, and specialized knowledge connects to institutional level investing. And 19. Private equity and startup investing. Investing in early stage companies. High risk, potentially extreme reward. But startup investing teaches one brutal rule. Most investments fail. One success can change everything. And understanding that leads to the final and often ignored investment. 20. Self-discipline and decision-making investment. This is the hidden foundation. Every investment decision is filtered through behavior. Discipline determines when you buy, when you sell, whether you stay consistent without discipline. Every other investment collapses because wealth is rarely destroyed by markets. It's destroyed by emotional decisions. 21. Franchise investing. Some people want business ownership without starting from zero. That's where franchising enters. Franchises allow investors to buy proven systems instead of building uncertain ones. Restaurants, fitness centers, service brands. You're not just buying a location, you're buying a blueprint. But franchising teaches a critical financial lesson. Sometimes success comes from execution, not invention. And execution becomes even more scalable when your investment doesn't depend on physical locations. 22. Royalty stream investing. Most people think royalties only belong to artists or authors. They don't. Investors can purchase rights to music catalogs, publishing rights, or licensing income streams. That means getting paid every time someone uses or consumes that asset. Royalty investments reveal something fascinating. The most powerful income streams often come from assets created once, but consumed repeatedly. and repetition leads directly into technology-driven investing. 23. Software and APP investing. Some investors don't build software, they acquire or fund it. Apps, SaaS platforms, and subscription software generate recurring income models. Subscription revenue is one of the most predictable income streams in modern investing. But software teaches a deeper principle. Predictability increases asset value dramatically, and predictable income streams are even stronger when backed by infrastructure. 24. Infrastructure investing. This includes roads, energy systems, data centers, and utilities. Infrastructure investments power entire economies quietly. Most people use these systems daily without realizing investors profit from their existence. Infrastructure reveals a powerful wealth truth. Assets that society depends on rarely disappear, and dependency creates stability, which connects directly to environmental investment opportunities. 25. Green and renewable energy investing. Solar farms, wind energy, sustainability projects. The global transition toward clean energy is creating massive investment shifts. Governments, corporations, and consumers are all moving in the same direction. But renewable investing teaches a strategic insight. Major economic transitions create generational wealth opportunities, and generational opportunities often appear strongest inside developing markets. 26. Emerging market investing. Investing in growing economies and developing countries. Some of the fastest economic expansions happen in markets most investors overlook. Population growth, industrial expansion, rising middle classes. Emerging markets highlight an uncomfortable reality. Higher growth often lives alongside higher uncertainty, and managing uncertainty requires a different type of investment mindset. 27. Options and derivatives investing. This is advanced territory. Options allow investors to profit from price movement without owning the asset directly. They create leverage, protection, and strategic flexibility. But derivatives reveal a brutal truth. Financial tools amplify both intelligence and mistakes, and amplification becomes extremely powerful when combined with arbitrage strategies. 28. Arbitrage investing, buying assets in one market and selling them in another to capture price differences. Arbitrage is built on inefficiency. Whenever markets misprice assets, opportunity appears. Arbitrage teaches investors to think structurally, not emotionally. But structural investing expands beyond markets and into people themselves. 29. Human capital investing. Investing in people's potential through partnerships, mentorship funding, or talent development. Some investors fund entrepreneurs, creators, or professionals in exchange for future revenue participation. Human capital investing reveals a powerful wealth concept. The right person can outperform any asset class. But people-driven investing works best when supported by global accessibility. 30. Global diversification investing. Investing across multiple countries, currencies, and economic systems. Most investors concentrate their money where they live. Global investors reduce risk by spreading exposure across different economies. Global diversification teaches the ultimate investing principle. Wealth grows strongest when it's not dependent on one system, one market, or one currency. And once investors understand diversification at this level, they stop thinking about investments individually and start thinking in ecosystems. Here's what most people misunderstand about investing. It's not about choosing one path. It's about building layers, stocks, assets, skills, networks, discipline. Each investment strengthens the others. Miss one layer, and growth slows. Ignore several, and wealth becomes fragile. But when these layers work together, momentum becomes almost inevitable. If you want to learn about credit cards or discover millionaire habits, please check the videos that appear at the side of the screen. If this video expanded how you see investing, don't stop here. On the screen right now, you'll find videos explaining how to build passive income step by step, wealth systems most people never learn, financial habits used by long-term investors. Subscribe if you want strategies that build wealth quietly but powerfully. Like this video so it reaches people who still believe investing is only about stocks. And comment below, layered wealth, if you're ready to build multiple streams of investment, not just one, because financial freedom rarely comes from a single decision. It comes from stacking the right ones.